So welcome everyone, those joining us online, welcome.
Ladies and gentlemen, on behalf of the President of the Institute, I welcome you to the second edition of CIB Ghana Post-MPC Policy Seminar.
So, balancing stability with growth, interest rates impact in geopolitical tensions and shocks. And so, I'd like to share with you the brief work that we've done from the Institute standpoint prior to the MPC, and then what we have found, what that is leading to, and why we are here today.
It's a great honor to be here today to speak on a subject that lies at the heart of Ghana's economic health and long-term prosperity: how monetary policy decisions shape our economy and financial sector.
We know what Bank of Ghana is doing. It will be good and fair to hear from you what the fiscal, the Ministry of Finance is doing to anchor the stability, but also look at all the things happening. Are there some real clear policy measures so that we don't get derailed by some of the tensions that we are seeing coming through?
It is quite clear when you look at all of the data that yes, we have relative stabilization, no two ways about that. Especially when you look at some of the high level or high frequency numbers for your macro fiscal aggregates. Whether you're talking about inflation, or you're talking about growth, or you're talking about reserves, or you're talking about your trade balances or current account surpluses, all of those things are looking much better now than they were a year and even a couple of years ago. That's not in doubt. The issue really now, and what sort of concerns us, I suppose, from the fiscal side, is really how you translate that stabilization that we're having into two key things. The first thing really being broader economic growth. So not just growth as in counting 6%, 7%, 8% GDP, but growth that translates second to jobs. That is quite clear from our end. And then the second thing, which often a lot of emphasis is not placed on, is also growth that is productivity enhancing, right? If you look at a lot of the data points from the last 20 or so years, and you measure the level of productivity within the economy, total factor productivity, or some of the other indicators you look at, we're not doing that great. And so yes, you could grow. Yes, you could be measuring 6%, and the latest data actually showed that we did 6% last year compared to 5.8% growth the year before. That's great. But it's really how you bridge that macro-micro divide, which has always been a real issue for many of us. So from the fiscal side, these really is the two key things that we are emphasizing on. And so a lot of the policy measures that my boss, the minister, and then the team at the MOF is really emphasizing on is pushing towards getting growth and also containing some of the excesses when it comes to spending. We've been very, very, call it tough on spending. The reason being that a lot of the expenditures that you see on the line items sometimes is not going into what I call this productivity and enhancing side, of the equation. So you would have seen last week the discussion that was had with organized labor. And then one of the points coming through that, well, if you take your revenue handles and you shared that cake between servicing your debt And then between paying for your statutory funds, GET Fund, NHIS, there's actually not even enough left to pay for salary, right? And what that means is that you would have to go get money from somewhere else to balance that equation. If you disaggregated that further, again on those data points, and you look at where the real spending is going within the various facets of the economy, again you begin to see that we could actually do a little bit more to ensure that cost or the broader cost of delivering governance to the people, right, is contained. So a lot of work now is around commitment control or commitment authorization. If you come to the ministry and you want to spend, yes, you have a budget line, it's coded, but if you don't have that commitment authorization, you're not going to be able to spend. And that is one of the measures that has been put in place to try and help contain some of the spending that is happening.
I'm a board chair of Opportunity International Savings and Loans. I have my colleague, Mr. Ben Kusi here. We intentionally came to see how we can also learn from this seminar. And it's been a very great and eye-opener for me especially.